Hello and welcome back. This is the last part of basis period. As far as F6 is concerned, the lesson which we have already covered were more than enough for you. There isn't anything else for you to watch as far as basis periods are concerned. Now come to the P6 as far as now, because this lecture is for P6, so we will consider the P6 aspects. You know, you might be thinking that we've covered lots and lots of stuff of basis period. What else is left? Because these were complicated enough for us to learn. So is there anything else to learn as well? The answer is yes. There is something else left as well. Now, if you see in all these scenarios which I have put here, and there's one thing, if you have noticed, that there isn't any. If you look at this example, say for example, example 1, I have given you all the years. Now these years are all in an order. So they are, one year is starting, then another year is ending, so another year starts then. So it is in order. But there isn't any change of year in any of these scenarios, is there? Say for example in here, 1st of the 1st 2005 to 30th of the 9th 2005, then the next basis period is starting from the point where the last basis period is ending. Likewise, it is going and going until the business is ceasing. Now, in each and every case, it is happening like that. However, there is something called change in accounting date as well. So all the businesses are not that kind for us, tax experts, to make their accounts according to our needs. So they may choose what they prefer, what they feel better. Excuse me. So they might change their accounting dates. Say for example, if I have started my business, initially I will be looking after my business. I will be looking after the things which are better for my business. I won't be considering any tax aspects. But after some time, I will start to think, when I will hire my chartered accountant, then he will tell me that you will have to think about accounting as well and taxation. Then he will suggest me that please change your accounting date. So in that case, if any accounting date is changed, then there is a little complication as far as basis periods are concerned. So say for example, if the business is started and business is doing well, they are making their accounts in order. After some time, they've thought about changing the accounting date. So we will be making our basis periods as well. But then when they change their accounting date, then we will also have to change our basis period. So that is a complication. So it is called basis period in the case when businesses are changing their accounting dates. All right. So we will see now, as I will share the screen with you, we will see the more bits and pieces out of this, that how does this work. All right. Now this bit, as I said, is only relevant for P6. So if you're studying for F6, then there is no need to learn this. However, this thing is only relevant if you are studying for P6. All right, I'm going to share the screen now with you. Now, if you could please stay with me. Here you go. I've already shared the screen. Now, I hope that on the screen, now you can see on the screen. Hang on. Sorry for that. I've gone a little far than that. Now, on the screen, as you can see, that this bit basis period on page 28, we've already covered this one. We've already covered this bit here. On the screen it says first basis period, we've already covered this one. Then it says the second basis period. There are lots and lots of rules of second basis period. We've already covered them as well. Then it says the third basis period. Now the third basis period, we've already seen that as well in our lecture, in the previous lecture. All right. Now, on the next page, page 29, if you see, it says subsequent basis period. Now, subsequent basis period, we've already seen that as well. Last basis period and overlap profits, we've already covered them as well. And then it says the overlap losses, right? So, and it says losses are never overlapped due to the basis period rules. Now comes the change of accounting date, which is basis period, change of accounting date. Now, whenever the word change of accounting date comes, that is a complication. There are 4 cases when the businesses may change their accounting dates as far as basis periods are concerned. So there is a first case which we are going to see now. When change of accounting date results in one short period of account. So short period, whenever the word short period of account or the long period of account comes, by short period of account we means less than 12 months, and by long period of account we means more than 12 months. So our normal 12 months period, we know that our normal period is of 12 months. So if it is more than 12 months, it is a long period. If it is less than 12 months, it is a short period. Alright? Now if it is a change of accounting date results in one short period of accounts, less than 12 months accounting period. So the rule says the basis period for that year is 12 months to the new accounting date. So the basis period will be 12 months to the new accounting period, a new accounting date, resulting in overlap profits, which will be added in the previous accounting overlap profits. So as I said, as I told you that businesses will be working, I've just in this example which I've given you on the board, I've already given you 4 or 5 years, but businesses might be operating for 20 years or 30 years, right? So in them 20 or 30 years, they might have overlap profits. The overlap profits might be coming again and again. So when the overlap profits are coming again and again, then the overlap profits are added in the previous year overlap profits, because overlap relief cannot be given until the business is going to cease. So that's why when there is one overlap profit and there is another overlap profit, then the previous overlap profit will be added in the next one, and so on until the business is going to cease. It is the time when we will get the relief. All right. So it says that this is the first rule where the business has changed the accounting date and the new accounting date is less than 12 months. Here you go. I've given you the example in the table beneath that. Now there are 2 sections here. One is the section which is given on the left side, and one is the section which is given on the right side. Now the one given on the left side, if you see, this is our accounting period, and which is our normal, which is before, you can say. All right. And the one on the right side of your notes is of basis period, which we will change to. All right. Now example, if you see on the left side of your table, it says accounting periods and then it says profits. Now business was operating from 1st of January 2000 to 31st of December 2000. It does not say anything, it is started or ending. It is just said the business is operating for years. So it has given us some years between trading. So it is not given the starting years or end years. So the first accounting date is from 1st of January 2000 to 31st of December 2000. Then from 1st of January 2001 to blah blah blah. Then from 1st of January 2002. Then from 1st of January 2003. Now I've underlined this one. I've shaded it. Now this one where this is the year where he's changing the date. Now if you see the before the dates were of 12 months, so from 1st of January to 31st of December, whereas in this year he has changed his accounting date. So he has changed his accounting date because he wants to make his accounts to 30th June. So that's why he made a small accounting period. So when he changed the accounting date and the change of accounting date resulted in less than 12 months, so this is the case. So he has changed his accounting date, and the accounting date has resulted in less than 12 months, because in this case these are only 6 months, from 1st of January 2003 to 30th of June 2003. Now the profit was £6,000 in this case. Now what we will do is, if you see on the right side of your notes, the basis period were coming. So basis period are exactly like on the left side until it comes to this shaded date, where it says 1st of July 2002 to 30th of June 2003. So it is given us £8,000 of profits, right? Now why did he give us the overlap, and why did he give us the £8,000 worth of profit? Now £8,000 worth of profit is given because if you see the next year on the left side, it is from 1st of July 2003 to 30th of June 2004, right? 1st of July 2003 to 30th of June 2004, whereas if you look on the basis period side, it is from 1st of July 2003 to 30th of June 2004. So it is exactly like same. However, just above that, one accounting date is being taxed twice, if you see. So where it says in the basis period, just above the shaded area, it says from 1st of January 2000 to 31st of December 2002, right? So it is from 1st of January 2002 to 31st of December 2002, so 4,000 worth of profit. After that, if you see, the period of 1st July 2002 to 31st of December is again taxed. Could you please check? It is again taxed. Now, it is because it is being again taxed, so that's why the 2 months of overlap profit is being adjusted out of this one. So it will be added in the basis period. So that's why it has given us the 8,000 profit. Now, if you see the basis period area, it says from 1st of July 2002 to 30th of June 2003, 8,000 pounds. Now, this 8,000 is given because the 6,000 pounds was a normal profit, and we have added 2,000 pounds into it. Why we have added 2,000 pounds? Because if you look the above area out of the shaded area, the profit was 4,000 pounds of 12 months. If you take the profit of six months, it will be 2,000 pounds. That's why it is added, because 6 months worth of profit is being taxed twice, right? It is being taxed twice. Now, which period is being taxed twice? The period from 1st of July 2002 to 31st of December 2002. If you see, it is being taxed twice. All right. So that's why it is being given the relief. So that's why it is 8,000 pounds. And after 8,000 pounds, everything else is exactly the same like the accounting period. All right. Now, if you move to next page, please, which is page 30, it is the case number 2. Now, this is the case when a change of accounting date results in one short period of accounts, which results in 2 accounting dates in a tax year. Now, the previous case was, although the change of accounting date was resulting in short period of account, but there wasn't 2 accounting dates in one single tax year. Whereas in this case, the change of accounting date will result in 2 accounting dates being in the same tax year. Right. Now, what is the rule? Rule says the basis period for that year begins immediately from the beginning of previous accounting period, excuse me, and ends on the new accounting date, resulting in basis period of more than 12 months. Overlap profit reliefs will be given up to 12 months up to the months exceeding 12 months. All right. So obviously, if it says that when the previous period is ending, so we'll take from that to the new accounting date. Obviously, if you do that, the period will become more than 12 months. So whatever is more than 12 months, we will take that, and that will be our relief will be given against that one. All right. Now, in this case, in this specific case, if you have already downloaded the notes and if you have hard copy, please make sure you write down the relief on that against case 2. Relief will be given instead of overlap profits. So there are 2 things. We can either take the profit forward, we can either take the overlap profits forward, or we can give the relief straight away. So in this case, we will not take the overlap profits forward, we will just give the relief straight away. Whereas in the case 1, which was the previous case, we have taken the overlap profit forward, because in that case there was overlap profit was taken forward. In this case, it is unlike that. All right. Now, in the example on the left side, it says the accounting period and the profits are also given. Now, the business was doing fine, and then it thought to change the accounting date. Now, when it changed the accounting date, it resulted in less than 12 months, from 1st of January 2003 to 31st of March 2003, and the profit was 6,000 pounds. Now, at this stage, if you see, it is 31st of March 2003. The 31st of March 2003, which tax year is it? I think it is tax year 23, isn't it? So this tax year is tax year 23, whereas the previous tax year above that, which is ending on 31st December 2002, that is also 23. So 2 accounting dates are coming in the same tax year, which is tax year 23. So this is the case. So when the change of accounting date resulted in 2 accounting dates being in the same tax year, then this is the rule. So rule said, above that, if you read the rule, it says the basis period of that year begins immediately from the beginning of a previous accounting period and ends on the new accounting date, resulting in basis period of more than 12 months. Overlap relief will be given up to the months exceeding 12 months. Now if you see on the right side, above that it says assume overlap profits of 6 months of $6,000 at start of the trade. Likewise, in the previous example as well, it has given us 6,000 worth of overlap profits. So we were assuming. So there is assumption in this one as well. Alright. Now in this one it says on the right side where the treatment is given, so it is exactly the same for the first 2 years where it is £3,000 and £4,500, and after that there are 2 accounting dates in the same tax year. So we have taken from 1st of July 2002, so 1st of July 2002 to the 31st of March 2003. So we have taken that and it resulted in 7,000 worth of profit. So why it has resulted in 7,000 worth of profit? And now you can see beneath that it says overlap profit relief. Now the months exceeding 12 months. Now if you see the months exceeding 12 months, how many months are they? So from 1st of July 2002 to 31st of March 2003. So how many months are these? How many months are these? If you see, these are 15 months. If you see, so if they are 15 months, so months exceeding are 3 months. So 3 months are exceeding. So how are these 15 months? Now you will have to look at the left side. So because I said we'll have to take from the start of the previous accounting date. There are 2 accounting dates coming in the same tax year. So we will take the start of previous one and we will take to the end of next one. So we'll take from 1st of January 2002 to 31st of March 2003. So these become 15 months, right? So the 15 months are coming in the same tax year. So these 15 months, how many months are exceeding over 12 months? 3 months are exceeding. So the overlap relief will be given for 3 months. So already in the assumption was there is 6,000 worth of overlap profit. It was assumption. So relief will be given for 3 months. So we will take 3 months out of that, and the remaining one will be £3,000. So when we take the £3,000, that will be our overlap profit for the 3 months. Alright. So when it is overlap profit of the 3 months, it says thus the overlap profit for 3 months would be 6,000 times 3 over 6. So that will be our £3,000. Now if you take this one and it says thus the profit for the basis period for the change would be £4,000 plus £6,000. These are 2 accounting dates coming in the same tax year. So it comes to £10,000. Then we deduct overlap profit, which is £3,000. The remaining one is £7,000. That's why it is given. Alright. So if we revise again, we will look at the left side. So there are 2 accounting dates are coming in the same tax year. If the 2 accounting dates are coming in the same tax year, we will have to determine if they are more than 12 months, if they are more than 12 months or not altogether. So altogether these are more than 12 months, right? So altogether these are more than 12 months. These are becoming 15 months. So but the months exceeding more than 12 months are 3 months. So 15 minus 12 is 3. So 3 months worth of overlap profit relief will be given. So we will not take the overlap profit forward. Instead we will give the relief. So we will get rid of that. So how can we get rid of that? We can just deduct it out of the profit. Alright. So the assumption was in the question, the assumption was that there is already 6,000 worth of overlap profits, so which is of 6 months. So £6,000 for 6 months. So it will be £3,000 for 3 months. So that's why £3,000 worth of overlap profit was given. And we have taken £10,000, which is £6,000 plus £4,000, which is £10,000, and we have deducted £3,000 out of this one. So that's why £7,000 was written there. All right. Now after that, if you see 1st of April 2003 to 31st of March, after that it is exactly the same, £8,000 and £5,000. It is exactly going to be the same one. All right. Now if you come to the third case, please, in the next page, not on the next page, sorry, just beneath that, it is same page, sorry for that. So third case, it says when change of accounting date results in one long period of accounts. So the first two cases were when the change resulted in shorter period of accounts. The second two cases are when the change resulted in longer period of accounts, which are more than 12 months. So when it resulted in longer period of accounts, more than 12 months, then what would happen? The basis period for that year is the same as accounting period, resulting in basis period of more than 12 months. Overlap relief will be given up to the months exceeding 12 months. So in this case as well, overlap relief will be given just the way we did in the previous example. So the business was doing fine. On the left side of the example, if you see, business was doing fine, then it resulted the accounting date, changed the accounting date, and the change of accounting date resulted in less than 12 months. More than 12 months. So when it resulted in more than 12 months, then how many months are they in total? So if we see from 1st of January 2002 to 31st of March 2003, these are becoming 15 months, if you see. All right. Now, assumption was that there is a 3,000 pound. The assumption was that 6,000 pound worth of overlap profit was in the question. So this was the exemption which is in each case. All right. Now, beneath that, it says overlap profit relief. Now, overlap profit months exceeding 12 months or 3 months, we know that, just the way we did in the previous example. So, if we take 6 months worth of profit is 6,000 pounds, 3 months of profit will be 3,000 pounds. So, we'll take 3,000 pounds. And if we come to the right side of the table, it says from 1st of January 2002 to 31st of March 2003, because it says it will be exactly the same. But overlap relief will be given. So the profit was 8,000 pounds, which should have been written as 8,000 pounds, but we have taken 3,000 pounds overlap relief. So that's why it is coming as 5,000 pounds. All right. So this is the reason it is coming as 5,000 pounds. And beneath that, if you see 8,000 pounds and 5,000 pounds, they are exactly like the same one. If you see of accounting date and the basis period is exactly the same. All right. Now, if you come to the case 4 on the next page, which is page 31, case 4, which is the last case, when the change of accounting date results in one long period of accounts, which result in no accounting dates in a tax year. Now, this one is a little bit complicated. If you see, now the accounting date has resulted in more than one accounting period. More than 12 months of accounting period, but which results in no accounting date in a tax year. So, say for example, if our tax year is 15-16, there won't be any accounting date in our tax year. So this is the case. Now, what is the rule? We will look at the rule later, but please come to the table first. If you look at the table, in the table it says, on the left side, the business was doing fine, 3,000 profit, 4,500, 6,000, then the 9,000 profit. Now, if you look at the 9,000 profit of how many months? It is from 1st of January 2003 to 30th of June 2004. How many months? These are, I think, 18 months, aren't they? So 18 months worth of profit is 9,000 pounds. What is the accounting date ending? It is on 30th of June 2004. Which tax year is it? It is 4-5. Now, could you look at the next one? So this one is 4-5. Next one is 5-6, I think. Yeah. Now, could you please check the previous one? Previous one is 2-3. So previous one is 2-3. This one is 4-5. There isn't any 3-4. All right. So the change of accounting date resulted in more than 12 months, but there is no accounting date in one tax year. So which tax year is it in which there is no accounting date? Tax year 3-4. So there is no accounting date ending in tax year 3-4. Right. So that is the difference between this one and previous one. Now, if this happens, what we have to do? Please look at the rule above that. Now, in the rule it says, there are 3 steps you have to follow. The first step says that take the new accounting date. Now, the new accounting date is, in our case, if you look at the left side, new accounting date is 30th of June 2014, isn't it? Yeah, it is 30th of June 2014. 4, not 14. 2004. 30th of June 2004 in our case. Alright? Then it says step 2, deduct 12 months from this date. So if we deduct 12 months from this date, so it is same date but the previous year, isn't it? So we'll take 30th of June 2003. We'll take the same date but the previous year, because we are deducting 12 months out of this. Alright. Now the step 3 says the basis period is 12 months to this date. So our basis period will be 12 months to this date. So basis period will be ending on 30th of June 2003, but it will be starting on 1st of July 2002. So our one basis period is that one. Alright. So 1st of July 2002 to 30th of June 2003. Now it says in the, beneath that it says resulting in a huge overlap profit which will be added in the previous overlap profits. Now look at the table. Now just where I have shaded the area on the left side, from 1st of January 2003 to 30th of June 2004, it says £9,000. On the right side of it, it says for our basis period. So our first basis period is 1st of July 2002 to 30th of June 2003. Now our next basis period will be from 1st of July, so the remaining months, from 1st of July 2003 to 30th of June 2004. So these are our remaining months. So our remaining months are 6 months, so we have added them once. Now if we do that, I hope that you can see our previous overlap profit was of 6 months. And how much was it? It was £6,000. So our previous overlap profit was £6,000. And if you see, if you just see beneath that, it says assume overlap profits of 6 months at the start of the trade was £6,000, which were for 6 months, and add overlap profit due to change in accounting date. How much we will add? How much is added? Now, if you see, our profit was £9,000, whereas on the right side it is £6,000 and 6,000 again. So it is £12,000. So £12,000 minus £9,000. Our additional overlap profit is of £3,000. So our total overlap profit will be £9,000. Now in this case as well, no relief is given, whereas overlap profit is given. So one is overlap profit, one thing is called overlap profit, and other thing is called relief. So there are two different things. One is overlap profit and other is overlap relief. So when it says overlap profits, we will just add the profit, we will take it forward. When it says the relief, then we will just give the relief. Alright? In each example, it gives you the it tells you what to do, whether to take it forward or whether to give the relief. Excuse me. Now in fourth example, it asks you to give the relief. In the third one, it asks you to give the in fourth one it says overlap profit, so we'll take it forward. In third case, it tells you to give the relief. In second case, it tells you to give the relief, and in the first example, it asks you to take the overlap profits forward. All right. So there are 4 cases. In 2 cases, we will take the overlap profit forward. We will add in the previous overlap profit. Whereas in other 2 cases, we will give the relief straight away. We won't take our overlap profits forward. All right. Now, as far as P6 is concerned, this bit here, which we have covered in previous lessons, this is not as important as change of accounting date. Now you might start to think change of accounting date is little difficult. I'm with you, you are right, I can understand it, it is difficult. But what you can do is you will have to learn the rules, you will have to read it again and again. So try to memorize it. So there are 4 cases. One is, which one? More than 12 months. Another is more than 12 months. Another is less than 12 months. Another is less than 12 months. So there are 4 cases. In 2 cases, more than 12 months. In 2 cases, less than 12 months. Now, 2 cases, more than 12 months. One is more than 12 months, which resulted in no accounting date in a tax year. But one is normal more than 12 months. Now, other 2 are less than 12 months. So, one less than 12 months is resulting in no accounting date in a tax, 2 accounting dates in a tax year. Another one is less than 12 months. It is normal less than 12 months, so no need to do that. So you can do like that. You can learn it. It is easier if you learn it. Just memorize it, because it is very, very important as far as P6 exam is concerned. So please make sure you prepare well for your next attempt, because it is highly examinable. All right. So that's it for now, and we will see our capital allowances in our next lecture, which is depreciation of assets as far as taxation is concerned. In accounting, we call it depreciation. In taxation, we call it capital allowances. If you remember, in trading profit we use to add depreciation. So although we add depreciation, which is accounting depreciation, but we will deduct tax depreciation, which is called capital allowances. So we'll add depreciation, but we will deduct capital allowances, but we will see in the next lecture. All right, that's it, and I will see you in the next lecture. Thank you and goodbye.